Hey, welcome everybody. This is John Palmodacci, Dr. Speed Selling. This is Raging Verbalist number 248. For those of you who are keeping track, hopefully you are. Welcome if you're new. If you're a veteran, glad to have you back and appreciate that. We talk about anything that is out there that pops into my head that I want to rage about. Stay mostly away from politics just because there's so much politics going on right now, especially with, if you haven't noticed, there's this election season happening. So available on YouTube and Facebook group, which is the Position to Win book. And somebody has to ask me the questions and put me to the test. And that person is the ever lovely Sandra. Sandra, welcome.
Hello, how are you doing?
Well, we're doing well. You know, my hair's a little wild, your hair's a little wild, but
That's right.
we're soldiering on. And by the way,
That's right.
this is the first Raging Verbalist that we've done that is now officially fall in the northern hemisphere, right? So it is officially
Yeah, that's
fall.
right.
Yeah.
That's right.
So all of your pumpkin spice latte dreams are coming true. So
That's right.
all right. So what are we talking about today? What are we
All
gonna
right.
go?
So it's our commercial real estate update. So what is the current state of the commercial real estate market?
So I'm doing the disclosure things that are going on. So I am invested in commercial properties through syndication. So that way, I think that's the right way to say it. So that way, you know, somebody can say, well, does he really have a vested interest or not? Or is he just opining? Well, I actually have a vested interest. So yes, I am talking about it because it is of interest to me. So for those who don't understand, commercial real estate is actually broken into office properties, multifamily properties, retail properties, and industrial properties are the four big categories. And some of them are doing better than others, but there is a big bunch of challenges, which we'll talk about today. Frankly, it's a mixed bag, but the office segment is really facing some challenges. Vacancy rates have reached highs. It hit 13.7%, nationally in March, which is like a record. There's more than double the amount of unoccupied space compared to a year ago. So that's even going up further. Leasing activity is about 30% below pre-pandemic levels. So, okay. And the future of office space is pretty uncertain because, well, we've got this whole hybrid work environment, which I think is going to eventually get ironed out and worked out. Now, what's a better spot is multifamily properties, which is where one of my investments is in. And demand for apartment buildings has increased significantly. And that's because interest rates are still high. Yeah, I know they just cut them a little bit, but it's hard to buy a house. So people are renting. And the net absorption, which is a fancy way of saying how many people are going to pick up, has actually doubled over the previous year. Vacancies, though, have increased a little bit to 7.8%. And part of that is because, it's a hot market. So people start building and building and building. Now, kind of the surprising one is retail, and retail is showing some resilience. Vacancy rates remain low nationwide at 4%. Now, it's very market specific. So keep that in mind. Demand has fallen below pre-pandemic levels, but considering nobody's building new retail, that's kind of working up. And many retailers have kind of worked out what they need to do. And we finally get to industrial properties. This section is the sector is experiencing a slowdown, but remains relatively strong. And part of it is the fact that there's so much e-commerce construction going on. So that's our quick update of the overall market.
All right. And what are some of the negative trends in commercial real estate?
Boy, and there are a bunch of them. One of them is, of course, the office sector. And the challenge there is that there's a declining investment volume and valuation. So if you don't understand how, especially this has always been interesting to me, is that people will say, well, my house is going up. Somebody owns a commercial property. All of my neighbors' houses are going up. So commercial real estate must be going up. And that isn't how commercial real estate valuation truly works. There are multiple ways to do it, but really it's all about cash flow. So commercial real estate investment volume has decreased substantially, and it's fallen by like 47%. And since 2023, it just keeps going down. And office prices have plummeted. So if you want to go rent an office space, it's cheaper than ever before, but it's going to be kind of lonely. And in fact, some offices are experiencing a 30% decline. And what's caused this, of course, is the shift to remote work. Hey, I wrote a book about that, which we'll talk about a little later. And the other thing is that delinquency rates for offices is on the rise. Um, the other part is that it's hard to get financing, considering that lenders and are imposing much stricter borrowing rules and regulations, and origination is down like 25%. So we're looking at a lot of challenges. The other thing that most people don't understand is that unlike your personal house or condo or townhouse, whatever it is that lots of commercial paper rolls over, which means every so many years the note has to essentially be rewritten. And there's just shy 929 billion. That's, I would say just shy of $1 trillion that's going to become due by the end of 2024. And this is going to create all kinds of other issues.
And why have so many buildings sold for so little money?
Well, it's the office space woes. Since they get hit so hard, and companies have adopted the remote or hybrid work model, and even if companies don't want people to work remotely, you end up losing employees. So that's created a challenge and much higher vacancy for older buildings who are maybe not as up to date as others. And it turns out there's a bifurcated market between prime and non-prime properties and that's the other quick lesson. We won't get into it in great detail, but they have like class A, class B, class C properties. And you can see that the class B and C properties are plummeting. Whenever I'm talking to a real estate investor, and I talk to real estate investors with a certain amount of regularity, I always say you got to make sure that your property's up to date, or people will roll along. The other thing is that there's much tighter lending, and that's a really big problem. So that's an issue that's going on. And to that end, of course, is that people have sold some properties at a pretty staggering. Hey, let's bail out and get rid of it now because it's the only thing we can do.
And are there areas where commercial real estate is still successful?
We mentioned multifamily properties are hot, and they're hot because again people can't afford to buy a house, they can't get in there, they can't qualify for the lender, and that has become a bigger issue. I mean, I just finished some financing on one of my properties and it took months to get done. And I don't have bad credit. I mean, I've got great credit, but it just took months and months and months. Paperwork is just enormous. In fact, my loan package was 178 pages. Now, this is a single family residence, 178 pages. I mean, geez, think about the days when I owned a mortgage company or part of a mortgage company. And what we have today is just amazing. Also, it's very geographically located. So if you look at hot spots like Nashville, Tennessee, or Dallas, Fort Worth, or Denver, Colorado, where I grew up, those markets are hot. So those markets are doing well, they're successful. And of course, we understand that a lot because, of course, that actually ties into some of the things that I talk about in my consulting and how I make my own decisions on things. Also, specialized properties. There's an emerging property segment that may come out, may not break out separately, but it's essentially digital economy properties, which are properties that are designed for digital work. Hard to believe that we're in 2024 and offices are not designed and built and put together in such a way that they're going to satisfy those who are literally living in the digital space, see it all the time, and that's an emerging part. Now, if you don't want to fall victim to this and you want to become as successful as you possibly can, so check out my book. Most businesses fail in the first 5 minutes. It just takes them 3 to 5 years to realize a position to win. So positioning of properties is really a key thing. Their location's important, and I know location, 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 but I would say 1A rule of real estate is positioning, positioning, positioning. Now you can pick this up at anywhere physical books are sold. You can pick it up at Amazon, Barnes Noble, Books A Million. Also, you can go to a local bookstore and they will be able to order it physically. You can go to our website, position to win book.com, positiontowinbook.com. Check it out. We'll I'll sign it and autograph it and say nice things to you. And you can also get it digital. You can get it in a variety of different ways. You can get it Kindle, Nook, and Apple iBooks. And also, you might want to check out and pick up if you want a little bit of Raging Verbalist with you on a regular basis. Is this very handy, very good mug. Every time I drink from it, I get a little bit more enraged. And speaking of, one of the trends that we talked about years ago, and it's such a big topic, is, of course, remote work for a better world, available exclusively on the Amazon Kindle store. So check that out. And hopefully, what that will do is talk to you about doing remote work smarter and better. Most of the complaints about smart work are essentially big problems with the fact that people don't do it very well. All right, Sandra, what is our next hot topic? What are we talking about?
All right, so how does the uncertainty in the tax code affect commercial real estate?
Well, right now this is where I veer off a little bit into politics. Anybody who talks about changing the tax code and affecting how investors and how money happens in real estate, you are going to see you're going to see effects in how people invest or not invest, and that becomes pretty crazy because what takes place is that there is delayed or postponed investments. I know there's talk about how we're going to build 3 million houses. I can tell you, you're not going to build 3 million houses without somebody really clearing the deck. Also, it reduces investment opportunity because people say, well, why would I want to, do this? Especially if I can put in something that's, real estate's long term. You don't put money into commercial real estate because you're going to do it and flip in and out of it. I mean, the options market, as we're speaking now, the options market is live, and their stock market is live, the bond market is live. All these things are trading, in an instant. Real estate is not that way. So any of these things that are going to change are going to put downward pressure. And also, if they change whether or not you can use what's called the 1031 exchange, if that goes away, investors will bail out. And my sense is that we'll see a hollowing out of the commercial market in a very substantial and negative way.
And when Elon Musk reduced his Twitter workforce by 80 to 85%, how did that affect the San Francisco real estate?
Significantly. The repercussions are still being felt in the office sector because the massive layoffs at Twitter, now known as X, contributed to a notable increase in vacancy. And all the preliminary data says that San Francisco's office vacancy rate is expected to rise in the third quarter, which we're just wrapping up to 37.3%. That is insane, and that kills valuations left and right because it just doesn't work. It also affects what are called the mid-market neighborhoods, which is local businesses are impacted, and that means that there are people who own a restaurant, a bar, some kind of store. Anything goes away. And also, all those people in Twitter who were involved in community activities, bing, bang, boom, they're no longer there. They're no longer going to hang out and do that. Also, the X isn't the only company to exit San Francisco. PayPal, Block, Slack, they've all left. They've all or reduced, and they are relocating. And those relocations are going to hurt big time. And whether they're going to Austin, Texas, those employees are going to move away from there, and we're going to keep seeing this trend continue to take place.
And is this a trend that appears to be taking hold?
Well, if you think about it, the sense that we can do more with less, or we can reshuffle the deck. When Elon Musk cut the number of people, and I know there are people who are still critics. I know there's a book out that says that this is the worst thing that ever happened and everything. X keeps functioning, and it keeps actually growing and going and moving along. So I think that there's a lot of investors, I'm talking about venture capitalists, who look at this and say, how come we have such a high head count and we're not making money? And if you reduce headcount and you can still keep those services going, I can tell you that there's going to be a lot of pressure on management to see about how, maybe we should, do things other ways. So I think it's going to have a big impact. And also the fact that as technology continues to improve and we can go offshore easier, we're going to see those effects happen again and again.
And since you wrote a book about remote work, how has that changed? How has that changed commercial real estate?
Well, we were hopefully at the beginning of the trend, and we wrote it because the pandemic was on the march and it was coming. And by the way, it killed the promotion of my first book. Most businesses fail the first 5 minutes. So from a time positioning standpoint, it was tough. But as I have seen this go forward, whether I am watching somebody on a business show complaining about how remote work doesn't work, or people who are talking about how do we keep track of these people, it's a different way to think about things. And what has happened is that right now the change in office space is, I think, fundamentally going to take place everywhere. There's a business that I know that's a $52 million a year business roughly, and they had a great office set up. In fact, one of my businesses, we sublet from them, and the deal in the sublet was that if they found somebody to, if they needed to move out of that property or whatever. Now, we didn't feel nervous at all. They had a 7-year lease. We felt pretty good. We got a great deal. They were happy. We were happy. And they gave us a 91-day notice, which was in our agreement, and said, hey, by the way, we have somebody who's willing to take over our lease and we're out of there. Now, this was the company that was strictly physical location. We have to be physically located. We're not going to go virtual in any way. I mean, it became a big deal. Well, now we look 3-4 years down the road, they've eliminated that major office. The satellite office, they actually are subletting to a client of theirs, and has dramatically changed their footprint. Now, I know that this has happened again and again and again. If you're out there and you have a business and you're thinking about how do I make remote work, go check us out. Go to positiontowinbook.com. Drop us a note and say, hey, how do I fix these problems? Because they're not insurmountable. Most of the time, it's because the technology that people have purchased or put for their team is totally inadequate. But if you look at that, yes, I think that this trend is going to continue. Will it become where everybody's virtual? No, because there's a lot of things that you need to do, face to face in the same room and all of that. But I think that the hybrid model will become the standard down the road for many, many positions.
And taking a look at your crystal ball, what do entrepreneurs and business owners need to be concerned about with commercial real estate?
Well, the crystal ball says impact of remote work, because right now we are seeing where people can be hired anywhere. Once you open up that mindset, and that means if you own a business and you want to hire somebody, and you think, okay, how do I, if I can't get the person to move to wherever you are, then you have to figure out, well, what am I going to do? And so the impact of remote work is going to continue to be felt because there's still a lot of businesses that haven't necessarily embraced this. I'm thinking about some insurance companies I've seen, but all of these are going to become more dispersed as the technology and the software becomes better at it. The next thing is sustainability requirements. There's a whole increase of awareness from tenants and investors that are looking for sustainable, energy efficient buildings. Now, that means you're going to have to retrofit older buildings or seek out how to get things in that space. There's going to be regulatory pressures, whether you believe in that or not. That's your choice. But this is a market trend that's out there. Technology and cybersecurity. You know, Real estate's going to have to become technologically integrated. Cybersecurity is a growing concern, and you have to make sure that your digital assets are protected. It's astonishing when I talk to people and they don't think in terms of, well, what are my digital assets? In fact, we should probably do a Raging Verbalist about digital assets. So you figure out what you've got. We've done some of that stuff, but right now I think of it as digital assets. I no longer just say, well, I've got some code or I've got some data. It's digital assets. Next there are market opportunities, and these challenges mean that you're going to see some of these buildings like in San Francisco that go for like 70, 80, 90% off. Well, if people can actually buy them at that much lower rate, then they are in a lower cost basis and they will see a way to make money from that. And a couple of things that are out there is financing considerations. Now, people keep saying, well, interest rates are going to go down. Don't be so sure given some of the, I mean, I think interest rates may come down, but not to where they used to be. That's number one. Number two is that commercial lending is different than other types of lending. So it doesn't mean that there's some kind of magical thing. In fact, right now people are looking at all kinds of alternatives to finance their real estate deals. And then finally, regulatory compliance is a big issue. This is why I am, you know, put me down if I could bet against it. They ain't going to build, no matter who's there, 3 million houses. Well, they're not going to be able to fix all these buildings just to get compliance and permits and all of that. Tell you, it's going to be a pain in the neck. I went through this myself, just getting my financing in place in this property. I ended up having to have multiple inspections. I had to do upgrades that I never thought I was going to have to do just to get the deal. That's going to happen on a regular basis. So what I would say to anybody who's an entrepreneur, a business owner, is make sure that you know the deals that you're going to make. Don't plan that this thing is going to be nailed down and secure, because we are in a dynamic world. And always remember that tomorrow could change. But not only could change, it will change. We don't even know, and we haven't even touched on how will AI affect everything that we do with the real estate that we inhabit. And with that, I want to thank you all for coming and joining us today. I'm John Paul Mendoza, Dr. Speed, telling you, for myself and the ever lovely Sandra, have a great week until we see you next, Raging Verbalist.